welcome on board Sadaf Sayeed, the CEO at Muthoot Microfin, and talk about how their business has been. Sadaf, good to have you on the show. We know that you're in a silent period, but in the second quarter, you said that Q3 will be better than Q2. Is the condition better now? Is the worst over for MFIs? Or do you sense some more pain in the quarters to come?
So as far as the collection efficiency is concerned, quarter 3 has been better. We have seen better collection efficiency in November, and December was better than November. So consistently we have seen improvement. But as far as disbursements are concerned, we have seen some impact of the regulation that have been put in place by MFIN. So the disbursements have slowed down, which consciously also we have also slowed down because we didn't want it to go too aggressive in the environment that we are kind of witnessing today. So the disbursements have slowed down, but in terms of portfolio quality, further deterioration, it has not deteriorated further. It has shown an improvement trend. Having said that, I would say not only for us, for the industry, Q3 would be kind of a peak of delinquency. So whatever has gone bad in Q1 and Q2 will hit the NPA bucket in Q3. And Q3 onwards, you would see a stabilization and downward trends further.
Hi Sadaf, this is Shrishti also joining in. You have reduced your guidance in Q2. So just wanted to understand that given the Q3, do you foresee any of the further cuts happening, or you're confident of achieving your full year guidance?
No, we are very confident of achieving our guidance. In terms of our disbursements, definitely we will be able to achieve. We have focused on secured lending now. So we have customers, almost 30% of our customers are in fifth cycle and sixth cycle. They have been with us almost for 7-8 years. And those are businesses which have evolved over a period of time. And we feel that those customers are ready for higher exposure. And we have helped them by giving loan to build some sort of an asset. So based on those assets, we will be lending them some secured facility. So almost like we are looking at over a period of 12 months time, we should be able to build around 700-800 crores of secured loan portfolio through these customers. So our focus would be there. That secured loan portfolio will help us to achieve our growth targets.
Right. The other thing I wanted to understand that you've reduced interest rates by 25 basis points for income generating loans and 125 bips for third party product loans in December. How much was the total reduction that you undertook in 2024 and how much more is expected this year?
Yeah, so our strategy is for long term has been to pass on the benefit of cost reduction to our customers. So in total in this financial year, we have reduced 115 basis points. In the first half of the year, the calendar year, we had reduced 55 bips. In July, we had reduced around 35 bips. And most recently in November, we have reduced 25 bips. For this financial year, this would be the cut provided if there is no further cut from RBI on the rates. If there is a cut, then we will assess. We have as a board decided a policy of maintaining a net interest margin of 12.75 to 13%, and which we can easily maintain for this financial year and also going forward. So if there is a room, definitely we will pass on the benefit to our borrowers.
Sadaf, if you could also provide us an update on the current trend that you are seeing with respect to the cost of the funds.
So as I said, in terms of if you look at the portfolio quality, the collection efficiency has been better in November and even in December. There would be, of course, flow of loans which were in higher bucket to NPA bucket because quarter 1 and quarter 2 were affected. In quarter 3 also, we have seen an impact of a cyclone which happened in Tamil Nadu. Almost 25 districts out of 38 districts were affected because of cyclone Fangal. And we have a natural calamity insurance policy for our customers. So we have been able to by and large recover that money. But because there is a little bit of a time lag between getting a claim and account getting affected. So those accounts by the end of December might be in stage one asset. So there would be an impact on provision that would be there. But we don't expect our NPA to go out of what we have guided for.
Sure. There are several rules also which have been implemented from 1st Jan by MFIs, like borrowing limits. What exactly is the impact of these rules and has it affected your disbursements or your provisions?
The impact of guardrails 2.0 would not be so much because while the MFIN guideline says no loans to 60 plus loan account, we have been already following a no loans to anybody who is more than 30 plus. So our guidelines are our internal credit policy even more stringent. And also in terms of 2 lakh loan exposure, we have been following that from August onwards itself. So whatever impact we have seen in Q3 is on account of that already. I don't see that impacting further. Q3 I expect to be a better quarter in terms of Q4. I expect to be a better quarter in terms of disbursements. January, February, March is a key business quarter, and also we are seeing improvement in the rural economy also. We feel that Q4 should be a good quarter for all of us. And I don't see too much of impact further. Definitely, there was an impact from Q3 perspective, but in Q4, we don't expect further impact. The guardrails with respect to number of lenders have been postponed till April 1st. I think that is a prudent policy because we had just implemented the guardrails, which were four lender restriction in August. There should be enough time given for the initial policy to be implemented and to assess what is their impact. I think that is a right decision that MFIN has taken. And basis that, I think Jan, Feb, March should be a better quarter for microfinance industry and for us.
All right, but Sadaf, also give us a sense with respect to your NPA levels as well, though if we look at it in percentage terms, that number is still below that 3% mark. But in Q2, that has seen a sequential jump, a marginal uptick is what we have seen. So wanted to understand, will the stress that we are seeing in the microfinance industry, that could lead to some bit of a more pressure on your NPAs, or are we in for some more provisioning?
So for the short term period, yes, there would be an increase in credit cost. The NPAs will also go up in Q3, as I told you earlier. This would be probably the peak of the NPA cycle. In Q4, because of various write-offs people take and ARC transactions that people do, NPAs will come down and credit cost will also peak out. I don't see further deterioration. I see improvement in asset quality in Q4. Q3 definitely would be the peak of delinquency. That is what I anticipate for entire microfinance industry.
Okay. Also, tell us about what kind of board restructuring are you looking at currently? We heard that Mr. Thomas John Muthoot has resigned from the non-executive director role, and he was appointed as the whole-time director. The fourth generation is now taking over at the Muthoot Group. What exactly is the plan from here?
Of course, the succession planning where people are from the fourth generation are joining the various companies' boards and taking an important position of running an organization. The important part of it, the other important part of it is that this is driven by the regulatory requirement. So the new regulatory requirement which came into effect from October requires the KMP of one organization to not remain a KMP of another organization unless it's a subsidiary. So because of that, Mr. Thomas Muthoot, who was a managing director for our company, was also a KMP at Muthoot FinCorp. He has relinquished the position of managing director, but he remains as a chairman and non-executive director on our board. In his place, Thomas Muthoot John, who's the fourth generation representative of Mr. John Muthoot's family, has joined the board. He was already on our board prior to listing. For 4 years, he was on our board, and he relinquished the board because of the requirement of LODR. We need 5 independent and 5 investee directors, so that's why he relinquished. He has again joined the board. He is quite experienced, and he brings with his a lot of knowledge of technology and his awareness about what is happening in the space. I think that will really benefit us in terms of driving technology and the IT strategy.
All right, Syed, with this, we'll let you go on that. Thank you so much for taking the time out and helping us understand what's happening within the industry and what's happening with Muthoot Microfinance as well.
If you like this video, then like, share and subscribe to ET Now.